Hello, this is IndoShares Connect. And?
Create. Huh?
Wait.
You're Create.
I'm Create and Connect.
Connect.
Sorry. It doesn't matter what name we have.
We had a long day.
Yeah, we had a long day now. So what's this week?
Well, we're going to talk about a company that allows faster content consumption by providing a digital network to end users. The name is Fastly Inc. It's listed in NYSE. Yeah.
It's one of the FAZER share, right? FAZER company.
FAZER. So the company is basically was established in 2011 and is a CDN service provider. So you might wonder what CDN is. It's an abbreviation for Content Delivery Network. So the network delivers contents using various kinds of POPs, which means points of presence under distributed service. It's what do you mean by distributed service? Is that in a normal, the existing cloud computing system, there's a centralized server, and the end user connects to the server, and the data is transmitted through that network. However, we currently the world is exchanging a lot of data, including the videos or some contents with high level graphics. So this company has created some smaller cloud servers nearby their users, so that the users could enjoy
the faster service.
Yeah.
So I think what it means, what he meant by POPs and a distributed server. You know how clouding is really based on data center. Like it's physically you gotta have a data center to have clouding service. So I don't think they have their own data center. By looking at their balance sheet, I don't think they own their own data center, but they actually I think borrow portion of data center from let's say Amazon's AWS or Google's data center. So they are using the big company's clouding server by utilizing it and providing service to their customers by connecting them a lot faster. So let's say the physical distance from the client to the data center, if it's longer, we call it latency, which increases the speed of the connection. So the shorter the physical distance is, faster the internet connection will be. So what I think they are doing is that they're borrowing basically like server from this big cloud company nearby the client, and then provide it to their customers, which reduces the speed. That's why the company name is FAZER.
So the main business they are doing is CDN, and the other one is edge cloud computing. Well, it's kind of similar concept to CDN in that edge cloud computing allows the data process at the point of usage or nearby the end users, so that the edge cloud computing reduces data traffic latency period, and it also enhances security in data processing. So there are some competitors, of course, and they are Akamai Technologies, Limelight Networks, and Cloudflare. What Fastly says in their investors materials or on their webpage is that they have less POPs compared to their competitors, but that those POPs were strategically placed in highly connected cities or the nations, and they also use the SSDs, which means solid state drives. So the advantage of using SSDs is that they don't have the physically moving parts inside the drive. So they could fetch the data consistently compared to the normal hard drives. Yeah. So to sum up, their business model is that they provide the CDNs and also edge cloud computing, and they charge their customers as following, as shown in the table, and the just like telecommunications service providers. I mean, the
they're charging it by the amount of data used by the clients. So this company, basically, like this company, I think is just like they're acting as a bridge between clouding to their clients. They're connecting it to the client a lot so that the clients can provide their clients at a faster speed by connecting. I don't know what SSD was, but I guess they're doing something with the IT that allows them to make it faster for their clients and a lot safer. So this is the business model.
Yes.
Fastly.
So for market forecast, as usual, I provided some data. Most commonly referred competitor is Cloudflare, which we will discuss later. But as you look into market share of the CDN market, Fastly is not the most biggest company in the list. It's actually placed in 7th. So the market is quite fragmented, and Fastly isn't such a big name compared to Cloudflare and other Google and Amazon platforms. Also, if you look at the websites added section, Fastly does not show big increase in their website edit. We will discuss it later with Mr. Create, but the number doesn't really matter for Fastly, as most of its revenue comes from the small amount of players which Fastly holds. So website number itself is not very relevant, but just to give you some idea of how they grow, I include this table. For edge computing demand, according to the Fastly's material, most of survey respondents said they will be looking into serverless computing or edge computing within next 24 months or so, which means half of them are into it and half of them are not. But if you look at the bright side, the rest of half will be included into their future list, which is positive.
So there's still a room for growth.
Yes, room for growth. Edge computing is needed for companies which needs quick data processing. My main focus was the automotive driving vehicles.
Self-driving.
As they process information a lot and they need fast processing power to avoid any accidents and sudden movements, they cannot wait until it reaches main cloud directly, as there will be latency going back and forth. Instead, they're using the edge computing, which adds a layer in between main server and the edge user, so they can process the information not on the main cloud, but in their edge computing system, which reduces latency. So with these infrastructure and automotive vehicles increase of their activity, Fastly will be used in more often, which is related to their growth of the company. And Fastly, I initially thought that it's mainly in entertainment and games, such as video and game contents, but it seems that its major part of their business is related to computer electronics and technology. But as this is statistical data, it may not clearly distinguish between those three areas, so we cannot say for sure that entertainment is relatively small shares of the business. But according to the data I researched from the Google, it seems that mainly it's right now at the technology related items. And for CDN market share, market size forecast is expected to grow up through the 2024 annually at 12.3%, which is about 50 to 60% over this period, which is also promising for Fastly. By continent, I found that major countries that are using the facility right now is United States and China, though it does not ensure that revenues are coming directly from these countries. It's because the leading country which uses the facility does not mean that it pays from that specific country. But I think it's worth mentioning United States and China is mostly using the facility for now. And also, this will be covered in the financial section, but revenue are mostly coming from the U.S. and rest of the world is consisting about 30%. So if you link those two data together, it's quite clear that U.S. is the main market, but they're increasing the importance of other countries, so they will expand their business outward. CDN by continents. I found that North America is the main continent to look into, and their growth is expected to be quite generous for next couple years, and that is correlated to facilities growth, which is quite important. And one thing I found quite interesting was Latin America increase of their forecast. Right now they're at very zero related, very small amounts, but into the future it will rise. And I think it's one market that firstly might be attractive to look into for their growth. So previous items were CDN related, and those items are related to edge computing. And I googled it and I found that Fastly is included in CDN major players, but not included in edge computing players. Looking into their IR material, it seems that edge computing is a fairly new business sector they're entering into, so they're not quite renowned on this specific sector. But edge computing itself is quite new technology. I don't think people are quite aware of this market, so there's a lot of potential, and as you can see, the growth rate is quite high for next 5 years. So I think Fastly has entered this market in the right timing. For this, let's break it into services. The Fastly will be included in Edge Management Platform, which is a light blue color, which also shows, every data shows that the edge computing and CDN will grow into the future, so the Fastly will enjoy their growth in such a section. And that was I rushed through it. Yes, yeah. I rushed through it, but that was the market forecast.
Yeah, so this is the 2020 third quarter 10K summary. I read it all, not entirely, but I skipped some. So just give you the light of their history. It was founded in 2011. Market capitalization as of last week, which is 2020 November 20th, is $4.92 billion. Business model, its industry is in software and edge cloud platform. Their headquarters is, as you can see, with their major revenue coming from United States. Their headquarters is United States, but they are expanding to United Kingdom and Japan. Their IPO date is last year, 2019, May 17th, at the price of $16. Their industry is software and tech service. It's classified by Bloomberg, I think. Their third quarter TTM revenue is $267.2 million, which makes it a PSR company of 35 times. So this is kind of high valuation, I think, but compared to Cloudflare, which is above 50 times, I think it still has room to grow, like a lot of people said in the presentation.
It almost seems like a new normal for a company to have over 20 times.
I think the market has given it the PSR of above 50 as a justified value because of the strong growth, I think, coming from CDN market. I think the CDN market, I didn't really look into specific numbers within CDN market, but I'm pretty sure autonomous vehicle is one of the major driver of the growth of CDN market. If you imagine that the car is driving, I don't know, Seoul or like New York area or California, you gotta have edge clouding. I don't think that the data can be sent to like very distant place and goes back and forth, which will increase the latency. That means accident for autonomous vehicle. So you gotta have a very close by or nearby clouding service in order to provide service to their clients, and I'm pretty sure autonomous vehicle would need edge clouding. I think. So yeah, so financial stock price is 83 as of now. The income statement is growing, but as you can see, 2025 quarter revenue was affected because of TikTok. Mr. Trump has suspended TikTok's operation in the United States, which makes TikTok has been 10% or 11% of the revenue of the company, so it affected basically 11% of previous quarter. But even despite their absence of revenue, this company still managed to grow without TikTok. So yeah, so this is kind of promising number. Balance sheet, as you can see, it was listed last year. They don't have debt. They just basically raised money in the public market by IPO this year and last year. So they don't have debt, so you don't have to worry about this company going to bankrupt. But that doesn't mean that this company is safe to invest, because basically this company is making net loss every quarter. So it's deteriorating the value of equity portion.
The total asset grow by like twice
Yeah.
between first quarter and second quarter.
Yeah, so
which is quite interesting.
that's when they added new shares. So I think it was like June or July.
Okay.
They managed to raise another 300 something million dollars in the market. So their balance sheet, their total asset has grown, and that much has grown basically from their cash balance. As I will go through. I didn't. I should have done this, but this is just one day trading value. I should have brought. If you Google it, you can see that the company went from $130, and then as soon as the market, the TikTok's suspension with their operation in the United States, stock just plummeted to like 60 something dollars, like 40% a day, in a single day. And I'm thinking that this stock will basically recover with the Biden's victory. I'm pretty sure, even without TikTok, I'm pretty sure they will be. I think they will manage to increase their revenue into the future. This is the balance sheet of the company. Mostly, as you can see from last year to the third quarter of this year, this company has grown by almost 2 times. And as I mentioned, that they issued new shares this year, and it's actually seated in their cash and cash equivalents. So I'm pretty sure they'll be looking into like potential M&A or expand their headquarters to other markets, other countries, which will basically need their money. But mostly, almost half of their balance sheet is in cash equivalent. And specifically, I think it's cash like 26 million, 60 million, and the rest of them will be like corporate bond and the treasury bond and ABS. But that's not important. Basically, this company has so much cash right now that you have given us. A lot of investors given this company that much cash.
Do you think it's usual for tech company to have such a high number of cash piled into their pocket?
Well, I'm guessing. Well, I'm not really expert in the tech area, but yeah, but this is usual because I don't think they can borrow money from bank. I mean, the bank cannot. They don't have any like buildings or hardware asset for them to borrow money based with the lien. So I don't think the bank. It will be easy for bank to analyze the market valuation of this company and then lend money to them. So I guess eventually, when their revenue grows enough to a certain number, they will be able to raise money from the bank. But as for now, the only way for them to raise money is through new sharing or stock sharing, stock issuance. Yeah, issuance.
It looks very promising that even this year has not ended, and the total assets doubled compared to the last year end. And most of those increase came from the cash and cash equivalents.
Yeah, because basically investors gave them the money, the IPO proceeds. But I'm expecting that they will probably utilize this portion of the asset to basically profitable use. I'm pretty sure they might expand to different countries, or they might go through M&As. So I'm hoping that they use this money in a profitable way for investors. This is their debt and equity part. As I mentioned, their liabilities is like 96 million compared to the $631 million in total assets. So like 10% or like 15% of entire asset is liability, but it's not even debt. It's basically like account payable. You have to provide further service to other people, accrued expense. So it's not really like debt. Like you borrow money from the bank kind of debt. It's just something that you're supposed to pay when
obligated.
Yeah. So it's not that important. So basically, yeah, this company has really nothing to look at in terms of debt or equity portion. It's just it's the beginning of operation, and they're about to use 300 some $1 million for potential expansion of their service. So if you look at the revenue part from 2019 to 2020 third quarter, their revenue has grown roughly 50%. Every year it seems like 50. They grow almost 50% almost every year. So this is kind of promising. Gross profit margin is 60%. They claim. This is a usual tech company. They have very high gross profit margin, and the rest of the story is this: R&D, sales, marketing, and gen and administrative expense are mainly salary or wage for those people who are smart and know how to do coding and whatnot. So, I think this company basically has to maintain like very specialized people within their company, so they have to invest in those people. So they have to invest in R&D people. They have to invest in marketing personnel. I read it in their 10K summary. It seems like they haven't done any kind of marketing strategy. It's been mouse to mouse kind of marketing.
Viral.
Yeah, like the customers like enjoying the service and they introduce to other customers and whatnot. So and they are now focusing on sales and marketing, but it's hard for marketers to go around and explain edge clouding computing. So I'm pretty sure they're also investing in marketing personnel education as well. You gotta be able to explain what it is that they're doing, and so they're about to use, I think, some portion of their cash for R&D and then sales and marketing, which I think will contribute to the revenue growth. So you got to look into those numbers in the next quarter. But that's basically a summary of the company's income statement. Another major summary for the 10K is that they went IPO in 2019 and they raised additional cash in 2020 by issuing new shares. Their gross profit margin is around 60%, and they're operating in 55 countries with 72 points of presence. Like I mentioned, the higher the number of points of presence, it reduces the latency for their customers. So when you see that this company is growing, you gotta also check their, I think, point of presence. That's like their strength of the company. So higher the number of point POP, it's important for their clients as well. They sign 1 year term contract for their customers mostly. So every year they renew the contract, but I think at the same price. 70% of the total revenue is coming from the United States, and 30% coming from the rest of the world. But it's interesting that 10% of the total revenue is coming from Singapore. So that's kind of interesting. Basically, they're making money from the United States and Singapore, and the rest of them is like just minor portion of their revenue as for now. But I guess I don't know what's with the Singapore, but they're expanding to Asian market, I think. As I said, their cash balance is 273 million. The rest in like MMF and corporate bond and treasury bond and ABS. I think why did I mention this is that their major asset is in cash, and if they're investing in something speculative, it becomes very dangerous. So I think they're investing in very small portion in the equity or stock market. So I think it's very less likely that they will lose money from. I think treasury market. I think they won't lose that much money. Their equipment is mostly in computers, so they don't have like any buildings or anything. It's just basic computers with people. They have done major M&A with the Signal Science. They bought it off at $775 million. I think for the purpose of API security. I think this company, like Signal Science, I think specializes in some kind of security thing with the API. I don't know what API is or security is, but I think it added to the value of the company by providing additional security service to their clients. So that's one thing. As I said, major 10 customers revenue contribute to 37% of total revenue. So when TikTok when Mr. Trump suspended TikTok's operation in the United States, it affected Fastly immensely because the revenue that they're contributing to the company is above 10%. So if you imagine suddenly the revenue of the company reduced by 10% just in the matter of seconds, people will panic. So this company, I think what it's doing is not only it's expanding their customer base, but I think they're increasing the revenue from each client. So existing clients, and I'm pretty sure current clients will be using more of their service because we are moving into the on-tech society. People are enjoying contents from computer or internet or cell phone, like using YouTube and whatnot. So I'm pretty sure this market will grow and FAZER will be benefited from that. They're basically start with programmable edge platform and they introduce to their clients, and the clients will use other products from them, like they will use security service and add it to their service and pay more from uh, from from what they have started in the first place. Their number of customers for as of 2020 third quarter was 313, which is like 14% growth from the previous year's third quarter. So their customer is not really growing exponentially, but the revenue that's generated from the existing customers are increasing. Therefore, their revenue is increasing by 50%. As I mentioned, R&D, sales, marketing, general administration are mainly comprised of salary for people. I think you gotta invest in people. This company is basically tech company. One issue is, as I mentioned, TikTok's revenue 11%, but Biden wants. I'm pretty sure this could actually benefit, especially. I don't know. You gotta wait for the news, but I'm pretty sure Biden will be more positive towards China, than Mr. Trump was. There was cyber attack that took place to this company in the past. I'm not sure. I'm not sure when it was, but it was mentioned in the summary or in the 10K or 10K report. They depends on they depend on Amazon, AWS, Google, and software as part of their cloud provider. So if you look at the nature of the business, they're using basically the cloud service from these major names, Amazon and Google, and they use a portion of their cloud and then provide it to their clients by edging it. So like, let's say I think this is just part of my imagination without complete understanding of a business model. If I start a business, I have no idea what it is, but I'm providing video contents to our clients, and my clients are everywhere in the United States, and I want to be able to provide faster service to them, but I don't have data center or whatnot. So I locate each client, and I look for clouding service nearby my client as close as I can, and then I pay my fee to these companies, Amazon and Google and software, and then connect it to my client. I think that's just part of my understanding of this company. So how faster can it pay? Well, like I can use Amazon in one area, and I can use Google in another area. But if it's close enough to my client, it will be benefiting them more than others. So I think one company cannot be closest to every client of mine. I will be able to distribute it almost fairly across the nation and provide service to my client. So I think that's what they're doing, and in the thank you report they say it depends on this company. So if they somehow if Amazon suspend operation within their cloud then the cluster will be affected basically. One other issue is a legal issue because of TikTok non-disclosure in their second quarter report. I think the investors are very angry and they're suing the company now. It's an ongoing issue right now, but the management of the FAZER doesn't expect that the result will be material. So they are also this is going on, but I don't think that will be a major issue for their balance sheet. I mean, if let's say I'm an investor, I'm suing the company, it will affect my share price anyways. So why would I want to do it? So it's better than I think lying to investors. They just didn't disclose it. So this is one thing you should keep in mind. Analyst rating by Wall Street Journal. They're currently in the holding position right now. The average target price by Wall Street Journal is $76.50. Right now the company is valued at $83, so I think it's above the average of the target. But if you imagine the stock price was $130 before the announcement of the suspension of TikTok's operation in the United States, I'm pretty sure this company will probably go back to I think 130 with TikTok's operation starting from Biden. So where to from here? My concern is that before TikTok issue, the stock price was 130. I'm pretty sure it will go back to somewhere around I think $100, probably. PSR is much lower than their competitor Cloudflare. Their Cloudflare is at the PSR 50 times. It's in Korean, but it's about 50 times. Our company, especially, is 32. So I'm pretty sure if you imagine 40 or 45, the stock still can grow into like $100. Biden won the election, so I'm sure this will be beneficial for Fastly because TikTok might operate now in the United States. But I think one pivotal issue is that security. Like once the security is breached in this company, not only does one client, they can lose like their entire clients
Yes.
information. So this will result in the massive lawsuits by their clients. So this is one thing that I'm concerned with. One day I wake up and people are like, yeah, Fastly's information has gone because of the cyber attack. Then I'm concerned. So yeah, I mean this is something that might be impending issue or might be ongoing issue for this company. We have the vaccine, but I'm sure we will also see another lockdown. This will also benefit the Fastly's revenue, which will increase their stock price as well. So one good thing, one bad thing, one concerning issue. Uh, they're in the middle of a lawsuit right now because of a non-disclosure of very important information. This is reminiscent of my Lewis Coffee investment. One thing that's different is that Lewis Coffee lied about their revenue. This company didn't lie; they just didn't disclose it. I think there's like major difference there. But I don't like company lying, or I don't like particularly company that's being sued because of their financial statement. So this is one. Is this their habit of operation, or is this their habit with their relationship with their investors? I gotta look into it more. But this is something I don't like about about the company. So that's it for today. It's been a long day.
It has been a long day.
Yeah, it's been a long day without you, my friend.
So if you like our video, please subscribe.
Yeah.
And press like
Yeah.
button.
It seems like we're not enthusiastic about your subscription, but we are very interested.
Yeah.
We would like to provide service as information as much as we can, and we'll see you next week.
Cheers.
Cheers.
Bye.
Let's grab some beer now.